EricMother.com with the weekend market analysis for April 15th and 16th, 2023. All right, let's take a look at markets here. We see we're coming off a little bit off the lows as far as the US markets are concerned. Net, we're going to look at the numbers, but it's been a relatively slow week. Net, the market is up slightly for the week, down this Friday, with about 20 minutes to go before the end of the session. If we take a look at the cryptos, we can see Ethereum here up about 3.5%, and BTC, if I can find it, is, let me see here, down slightly, down 0.21%. This is the weekly action. We can see pretty much, let's call it a slightly up week for the general markets. Ethereum is having a nice week here, up 12%, and BTC for the week is up about 7%. Let's begin by taking a look at the NASDAQ as we did last weekend. And we can see here, if we draw a line, again, I've been talking about this. We moved above this trend line in terms of price here. That's good. Now, the other thing we are working on is we continue breaking out, or at least are in the slow process. It's been the third week now since the breakout here. And that number that the NASDAQ cleared is 12,006.95. So we are above this number. It was tested last week and the market held, and this week again we dipped slightly below it, but we are closing above it. So that breakout is still intact. So that's another positive in my opinion. Also, don't forget, as I've been mentioning over the last couple of weeks here, is net whenever you see a market coiling up as far as the moving averages are concerned, this crossover is constructive. And we can only assume that this market can be sideways, but over time, it should be building up energy to go higher as long as it remains above the weekly moving averages. As far as the RSI is concerned, of course, the NASDAQ is still within the possibility of either confirming another instant of resistance like it did here. So this could still be in the process of forming resistance, or we could be working on eventually clearing this area here. Now, I'll talk about the cryptos later on, and I'll show you that they cleared their weekly resistance. So we'll see whether the NASDAQ can do the same as well. NASDAQ daily in terms of price, if we take this daily closing high, we can see that this is where the market's been stalling here in the last 2 weeks. It's attempted to break out above that 2023 daily closing high for the NASDAQ. And let me give you that number again. It's 12,200.82. So as long as we are unable to clear this area, it's not a good look in terms of immediate momentum. In other words, if we're really going to start adding on pace, we need to be above this area. We need to break out above this price. Now, something else to consider here is that the more we keep finding resistance, that could ultimately set up the market for moving lower. Now, of course, the daily RSI, and I won't touch on this, we can see that this is where the NASDAQ is stalling. So also the daily RSI is an area that is showing stall points, but not a biggie, because one good day here could take us above this RSI resistance. One good solid day can clear this breakout and move us above this range. So right now the NASDAQ weekly is fine. The daily is where we're seeing a little bit of a, let's call it, market trying to decide what it wants to do. Now, hour to hour, if we take a look at the NASDAQ from an hourly standpoint, when the market was at the lows of the day, if you are watching the hourly, you could have seen the RSI come to make contact with the RSI lows line, and so you knew that the market would be closing off the lows of the session. It's another way of saying that hour to hour, as long as we're above the blue line and we haven't broken down below it, then we are looking at a market that is still showing strength in terms of coming off the lows here. We are still showing sideways to a higher market as long as we are holding the daily RSI line on the NASDAQ, the hourly line on the NASDAQ's RSI. Dow daily is above its 50 and 200 moving average. So net, that's still a decent market. What we see here day to day, similar to that of the NASDAQ, is the RSI has come back to an area of potential resistance. And this is where we had stalled in late 2022 here. And so it came close here. We were rejected in I believe that was in January, and we seem to be rejected again. So day to day, just like the NASDAQ, the Dow could be now sideways here until it can clear this line here. Maybe we're in a sideways day-to-day range. What the market would need to do is clear this range here so it can have an opportunity of moving beyond the recent RSI resistance, as we can see from day to day. It's not the biggest resistance, but daily we can see that resistance level. S&P 500, similar to that of the NASDAQ. Just want to show here, there's also a breakout level. This is the RSI, of course. Just like the NASDAQ, we do need to clear this area if we're going to move higher in the short term. Otherwise, we know that week-to-week resistance around current levels could mean the market that is due for a pullback. But what I was discussing in this weekly chart for the SPX, I think the main takeaway here is a simple tracking of the price. Take the 2023 weekly closing high and use that as a gauge, because as long as we're above this level, we can say we're in a breakout mode. And this level for the S&P 500 is 4,136. So we would need to be above it to really show that the market is taking out 2023's weekly closing high. And maybe we set the stage to move higher if we can break out successfully. And of course, failure to break out is never a good sign. Remember, failed breakouts are notorious for taking markets lower. So we can gauge 4,136 on the SPX to gauge market strength. Now, I won't even show the monthly charts for all the major averages, but the Dow, NASDAQ, and S&P 500, all of them have their monthly RSIs above 50. So we have to assume that net, since the Dow, NASDAQ, SPX have their monthlies above 50, that we're in a market that is sideways to higher in the weeks and months ahead. It's only when the RSI turns negative for the month that we can start looking at a big picture possibility of a down market. Right now, we don't have that look of a possible down market. Take a look at the ETF that tracks the VIX, SVIX. Just want to give you a number here on the weekly, actually on the monthly. By the way, quick example here of RSI 50 support with uniform activity right there, bang. And of course, you come off the lows, and what that means is you come back to test prior highs, and we can say even right now we are testing these weekly highs. So RSI 50 support, uniform activity is a good gauge of an intention. Now on the monthly for SVIX, which is an ETF that tracks the VIX, we can also use this to gauge market strength or market weakness in the short term. So if it stays above January's monthly closing high, and let me give you that number, it is 17.98. Anything above this number, which is January's monthly closing high, then we can say that the VIX is going to be pushing lower. This instrument would be breaking out, which would be positive for the market with a breakout. A failed breakout above 1798 would mean that the VIX is gaining some strength and that the general market is positioning to pull back. So above this number, good for the market. Below this number, the market is losing its recovery momentum to the upside. Given the news that was flowing about 6 weeks ago with the banks, we can see here that one of the reasons why I personally was not seeing that bearish outlook is because of the monthly, as I discussed all these weeks, is this RSI coiling and moving higher is what I was anticipating. So if you take a look at the long-term picture, I've been talking about this for weeks, many weeks. The bearish sentiment that was out in the market to me was not valid, because when I took a look at the big picture for the XLF, and something I've talked about is I couldn't see it really dropping until it broke the RSI lows line. And you can see this line right here on the XLF. It makes sense that it is turning positive, and we're already showing signs of holding here. If the RSI for the XLF can move above 50, then that means that we are still in a market that is sideways to higher in terms of financials in the months ahead. In fact, if we take a look at the banking index ETF, KRE, again, this is 2009 lows. We take that information and use the uniformity concept. Another reason why I wasn't bearish about 6 weeks ago, when everybody seemed to be, let me not say everybody, but a lot of people are thinking we are definitely revisiting the 2008 bear market. But this to me is not where you turn bearish. It is actually where you turn bullish. We had support here in 2010, support here in late 2011. We support here in 18. This was messy, but eventually support in early 2020. And here we are in 2023. Until we break that line, you have to assume that this is still a market that could bounce. Until this line breaks, and we haven't broken it, I would not say this is bearish. This is a market that has pulled back significantly But now this is the indication that more than likely even the banking sector ETF, the KRE, could be in an area where it finds support. So I would not be bearish until it breaks that lows line. Besides, you can also draw another line. So there's line number 1 here, and then there's line number 2, which you can draw as the lows line, like that. Until we break these 2 lines, even the KRE looks to me in the coming months and weeks is going to find support and ultimately start building for a move and a recovery move higher. It's only when they break the 2 lines that we can entertain a market that could be seriously pointing lower. Right now, I don't see the bearish scenario in my opinion. Taking a look at the bank Nifty on the monthly, we can see that it is holding support on this RSI lows line on the monthly. So that's still a good market that is doing exactly what you want it to do in terms of support. On the weekly though, we can see, yes, we have recovered, and go back to my analysis a couple of weeks ago. I was discussing the possibility that this could be support area right there. It has turned into support. Now I'll show you the exact opposite, which is we are coming back to test this breakpoint here. And so week to week, this could be a challenging spot. Is it a big resistance? No. Why? Because the monthly is controlling. Whenever there's some type of a conflict between the monthly or the bigger time frame and the smaller time frame, you give the benefit of the doubt to the bigger time frame. So the monthly is still stable. I would say week to week, the bank Nifty could be coming here and finding it challenging, maybe a pause. And on the daily, actually, you know what? Let's go to the Nifty itself. Let's go to the Nifty on the weekly here. And on the weekly, we can draw a couple of lines and they look like this. So line number 1 is this point here, which is a pullback zone that we did in late 2022, somewhere there. Take that line, draw a uniformity line, and then we can also draw a topside resistance line. It should look something like this. There's the market close, something like this. So these 2 lines in time could be where resistance could be had. Once it moves to this level, then we can look at the possibility of maybe a pause. But I would say there's still room for upside. And if we take a look at the daily probably is showing the most potential for short-term resistance. It is this breakpoint here. It's a simple breakpoint in early December of 2022, coming off the highs there. And I believe this is what is currently being tested. And we shall see whether it can eventually clear this area here. So day to day, it's come to this area. So it would mean that we would need to see the daily move above this range so we can continue building to the upside. Otherwise, day to day, based on this and the fact that we've really had a nice couple of days, positive days here, nice grouping of positive days, maybe a pullback here is what we see next based on coming and testing this uniformity resistance line. So maybe day to day, week to week, a slight pullback, but the month still continues to be stable as far as the Nifty and the bank Nifties are concerned. It's definitely a market I would be looking for breakouts, because as long as the market is stable, breakouts are going to be doing well, if not great. Taking a look at UUP, of course, UUP should be down because gold has been moving higher. But if you take a look at it, it's still in this range. It's been in this range going all the way back to December. It's not a big change. And also we can see that, in my opinion, based on my views on gold over the last couple of weeks, this is still within the potential of finding support. This is where we clear this area here. We move higher. We've tested it once here, which is somewhere there. And now we are within the range of possible finding support and coiling higher from here. So based on my observations of gold over the last couple of weeks, I think this is setting the stage for eventually moving higher. Now, on the daily for UUP, we can see here, it looks bearish because it's trading below the 50 and the 200-day moving average. But I see it as a possible area for finding some lows. If we take a look at this line here, actually we can even draw it this way. Number 1, this line extends and you can see it find support exactly where it's finding support right there. And also we can take the uniformity support line, which is this line here. Now let me change colors here. This line here where it should look something like that. And again, you can see the black and the blue are finding support exactly where it's finding this snapback move as of today. So I would say gold is pulling back. Remember, I've been thinking gold is not going to have a big move as would be many people's expectations. And I think the dollar eventually, my thinking here is the dollar, as long as it stays above these two lines, sets the stage for recovery in the next couple of weeks and months. It's not going to be like a daily thing. It's going to be a while because it's going to have to trade above the moving averages first and foremost to stabilize before it can go high. So it's not going to be an immediate support, but I think over time, that would be my thinking. In fact, if you take a look at GLD on the weekly, we can see that if you take this weekly closing high right here for GLD, that's the level I would watch, and I've been, suggesting it's a good level to watch for strength. Are we breaking out? Are we stalling? So that number there for GLD is at 185.09. This is the weekly. It would have to be above that number. We closed above it, so that's fine. It needs to stay above that if it's really gonna see another push to the upside. My thinking, based on the monthly, is that over time this rolls over, and that continues to be my thinking. On the monthly for GLD, we can see, in fact, let's go to 3 years, and this is my main reason why I'm not as excited, because we are not seeing the RSI push to 3-year highs, and also we don't see GLD breaking out with the MACDs at 3-year highs. So because of failure to meet the minimum requirements for the ultimate Moire breakout, my thinking has been over the last couple of weeks that gold ultimately is not as strong as it might seem in terms of the price movement. So quick summary here, GLD on the long-term picture coming back to this area has been resistance, and I think if it continues to find resistance just like it did in early 2022 and now trading exactly here, continued resistance here means that ultimately the next move is down, and if it can clear this area, then maybe we can start entertaining the possibility of a sustained move higher. But I don't see that outlook. I would continue to anticipate that this is where it stalled and has stalled, in fact, even in 2021. So this area here, as I've been talking about, has been resistance for a minute. 2021, 2022, and I think 2023 again, it's within that possible resistance, but we'll see. So yeah, I'm not as bullish as far as gold is concerned. On the daily, we can say we have this improvement day to day, declining RSI strength. There's a breakout in GLD here above 188 that seems to be stalling. So if you take all those things into consideration, it could be that we've already started to see the reversal lower. So as long as it stays below 188 on the daily, I would say that the daily is already giving us early signs of a red flag. And if it drops, let's say if it can drop below, let me see, about 185. If it drops below 185, that would be a second red flag, and that would definitely mean that now we've set the stage for a meaningful pullback as far as gold and the miners and silver are concerned. USO, which tracks crude oil, after a nice couple of weeks of recovery here, we can see it could be coming back to test this area, and this area has previously been resistance. This is the 5-year weekly, by the way. We break down here in 2022, somewhere there, and turned into resistance here late last year, and now we're in this general area. So we need to clear that if we are going to move higher. It would be similar to that of the NASDAQ weekly. We need to clear this area if we're going to move higher. But remember, on the monthly is fine because it found support at the RSI 50 level, and so we give it the benefit of the doubt. At least as long as the monthly is positive, we give it the benefit of the doubt to be sideways to higher in the months ahead. Just like USO, XLE has had a couple of weeks of bounce, as has the general market. But now we see it's coming into potential area on the weekly of resistance. It needs to clear this topside line if it's going to move higher. And also we have a back test line if we draw it as such. So you can see it's walked straight into this area. It needs to clear these two lines if there's going to be any upside in the energy space. Otherwise, week to week, this could set the stage for resistance here and some type of a pullback. But it would be a pullback within what has already been a strong recovery on the monthly. So yes, we could get a shallow pullback because the monthly is still showing the recovery setup. Again, I've been talking about this breakout here. Take this breakout and extend it as such. It continues to offer support on the monthly, just as we see with the Nifty. As long as it is positive for the month, you can get week to week or day to day pullbacks and still be in a market that is net sideways to higher, as long as the monthly continues to offer support right here. Now, at some point, should the monthly break below this area here, turn down and break this line, then that would set the stage for a more meaningful trend to the downside as far as the energy names are concerned. By the way, XLE weekly, and I'm going to do this quick. Also on the daily, we can see that this is an area where we pull back in November, and we are coming essentially to challenge this area. So it's an area to watch. We stalled here with uniform activity resistance. That was a trap, and we're in this general area. If we're going to go higher day to day, we need to clear and move above this line. Otherwise, day to day, this is where you'd anticipate, if you have profits, to take some off the table, because the next swing trade could be to the downside. Sticking with the daily charts, Ethereum has its daily RSI now above 69.1, and so we can see that it should continue being strong day to day as long as it is above RSI 69.1. By the way, if you consider the move from here breaking down to this sharp, almost sharp recovery, is you can see how market is very good at convincing people to place the wrong bets. So if you take the line connecting RSI lows, connecting the lows here, here, and here, you can see how this was uniform activity below the line and back above it here. So whenever you see uniform activity, it tends to be a trap zone. So that was definitely a well-crafted zone. Actually, the other thing I wanted to talk about here is if we take a look at let's take a look at BTC on the 4-hourly. What I want to show here is on the 4-hourly for BTC. Take a look at this wedge on the RSI. So here we were really getting narrower and narrower. And then we have this. So this wedge is what I call a swedge, sentiment wedge. There's a breakout here, which leads to this recent day-to-day move higher in the BTC. Now, that's a 4-hourly wedge. Take a look at the weekly wedge. So again, go back to the weekly, maybe go back about, let's go back about 5 years here. So 5 years on the BTC weekly chart. And if you remember, I talked about this for many, many months. I was talking about this wedge formation here. And notice from a timing perspective, if you understood what that meant, the moment we cleared this area here, you could see that this is the beginning of 2023, and BTC at that point was under 17,000, let's call it 17.5. So that was another good example of a wedge breakout. By the way, on the weekly, BTC is also pushing its RSI above 69.1. So as long as the RSI is above 69.1 on the weekly, I would anticipate that BTC should continue to be stable to bullish in the short term, week to week, depending on whether the RSI is above 69.1 or not. Go back many months, I was talking about this area here on BTC monthly being an area you can anticipate that as long as this holds, that the next meaningful direction is going to be higher. And of course, we've got that move higher. Now, I want to show you month to month. We could be running into an area. Remember, this is the middle of the month, but by next month, this could be an area here to watch. It's a simple backtest line that is going to be a question mark in my opinion. If we are not able to move above this line here, if this turns into resistance month to month, then that's where we get a pullback. So I would be very vigilant in the months ahead to see whether this turns into an issue, because we can see that this is a break point. That break point is going to be tested. So we can draw a uniformity line as such. Again, this is an area month to month to watch for potential stalling. In other words, if we're going to move higher in the cryptos, we need to stay, but the bulls want the RSI to stay above this range. Now, remember, I was saying that BTC has cleared the resistance that the NASDAQ is dealing with. There's this line here. If we draw it, this break point brings us off the high in late 2021, and we can draw a line from there. This is the line I was talking about, and we have cleared it. So this is good as far as showing that there's appetite for higher prices, and maybe the NASDAQ can do the same thing week to week. We shall see. On the monthly for BTC, we can see what happened last month as we moved above 50, and you can already see that the market is trading differently now that we are above 50. This is BTC on the monthly. As long as we're above 50 net, it's a market that is sideways to higher. Ethereum, the same thing. It's working on month number 2 above 50, and already we are seeing that it is picking up momentum. So as Ethereum and BTC have moved above 50, we can see other instruments. For example, Litecoin is just this month moving above 50. So it too could have a big up month as long as the monthly RSI stays above 50. We could have another big up month in the cryptos. And we can see here, you can also use the recent January monthly closing high as a breakout level to watch, because if it can stay above 94.15, depending on what exchange you are using, it's the monthly closing high from January, so 94.15-ish. This would be also a short-term breakout. Unfortunately, it doesn't meet the minimum requirements for the more the breakout, but above 94.15, and if it can stay above 50 on the monthly, we could have a continued push in the cryptos. That's Litecoin. And we can also see instruments like Doge trading at about 47.92. So let's call it 43. So if Doge can also push this month and have a move above 50 on the monthly, it would mean that the entire crypto landscape is continuing to push higher this month. So I would watch the cryptos that are approaching 50, because if they move above 50 and stay above 50, they might have another big push this month or in the coming months, as they also get their chance to stage big monthly moves as they cross back above RSI 50. These are the closing numbers. We came off the low slightly, but still down for Friday. I am Eric with Mwathe.com. I leave you as I found you, in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator, Adonai.